Hello, this is Stephen Primo, and welcome to this week's Primo Trades. Now, in this brief educational video today, I'm going to talk about something that happened this past week that was on a lot of traders' minds, and that affected a lot of traders as well, and that was the huge drop we had on September 13th. Now, the Dow posted a near 1,300-point drop on Tuesday, and stocks booked the worst day since June 2020. Now, it read that the U.S. stocks finished sharply lower on Tuesday, with all three major indices posting their worst daily drop since June 2020, as high U.S. inflation has proven hard for the Federal Reserve to tame through rate hikes. Investors hit the sell button on equities after the August Consumer Price Index, or the CPI, rose 0.1% in August. Now, that was higher reading than many on Wall Street had expected, spurring some to warn that the Fed could raise its benchmark policy rate by as much as 1% at its meeting next week, something the central bank hasn't done since the 80s. So if you're one to follow fundamental news, this is terrible news, all right? It affected a lot of traders. If you bought that day, or if you have been holding on to a long position, you had a really tough time. But this brings us to today's theme about what I want to talk about and share with you. And this is something that I learned over 4 decades ago on the floor of the stock exchange. And it's what my mentors taught me. And they said, basically, trading or investing based on fundamental news is not, I repeat, not a requirement for consistency. Why? Because the market you're trading tells you just about everything you need to know. Now, most traders, myself included, when I first started trading 45 years ago, were taught to listen to what the earnings are going to be, what the economic news is, what's being told to us over the airwaves or on TV, and that's going to help us determine whether we're going to be a successful trader or not. It wasn't until I stopped looking at the news and stopped basing my trades off that I started to become consistent. So let me show you how you can apply the things that I use that really don't focus at all on fundamental news, and how it could have helped you this past week, okay? So let's look at the markets here on the PTS Primo charting platform, okay? Let's start out with the spiders. This is the main fundamental thing we teach all of our students just beginning, and that is to apply the buy-sell line in our upper left-hand corner of our platform, okay? And we want to focus on the category called the fluid. What this does is it paints the screen above the 50-period moving average blue. Below it is red. Now, when price is in the blue zone, that's where you want to look for buying, all right? That's where you want to be a buyer, and you want to look for buy setups. When price is below in the red zone, you want to look for sell setups, or you want to be out of the market entirely. Now, if you recall, a few weeks ago, I talked about this, showing the SPY and how it actually bumped up against the buy-sell line. But what we mentioned is that it's required for 3 to 5 closes, either above or below, to generate an overall trend. So if we had 3 to 5 closes back here, we could see that we were going higher. Once we establish 3 to 5 closes below, it's telling us that the market wants to go lower and the overall trend is down. Therefore, you should not be a buyer. Therefore, you should not hold on to positions. Now, when we had this 2 days above in the blue buy zone, that was not obviously enough for us to change our overall trend position and go long. Therefore, you could either stay short or look to short more, or be out of the market entirely. And you would not have gotten hurt on the 13th and the ensuing days. Now, was any of this based on fundamental news? Was any of this based on earnings or what's going on the economic front? Absolutely not. The market was telling us that it still wanted to go lower, even though we bounced up a couple of days. Let's look at a different time frame, the weekly spiders, okay? This is even more pronounced, because here's a weekly chart of the spiders, the S&P ETF. If we apply the fluid buy-sell line, once again, we see that we've been below since mid-April, and that there's absolutely no reason, if we're a longer-term trader, to be involved in this market. We should be looking to sell. Anytime there was a bounce, it was quickly followed by a sell-off. Same here, all right? Now, what if you were a day trader? What if you were going long the day of the 13th? Well, let's look at a 10-minute chart of the spiders, okay? Once again, here's where the spiders open. And if we apply the buy-sell line, the fluid buy-sell line, we would have seen on the very first bar that we were in the red sell zone. Therefore, we would not be looking to identify any buy setups. We would be looking to sell. And you see how, if you were a seller, you would not have been hurt at all during that day, an intraday seller. And if you were a long trader, obviously, you would have had a very difficult time looking for the market to bottom. Now we've looked at the ETF that represents the S&P 500. Let's look at individual stocks that have been affected by fundamental news or announcements. Here's Adobe, okay? Excuse me. Obviously, some news came out. I have no idea what it is since I don't follow news anymore, but where it gapped down from roughly 370 all the way down about 60 or 70 points, okay? How could this have helped us? The first thing you want to do, once again, is apply the fluid buy sell line. And you would have seen going back roughly 3 weeks that you should have been out of this stock entirely at 375, okay? There's absolutely no reason to be holding on to a long losing position. And if you're a more aggressive trader, you should have been looking to go short. Therefore, this news announcement, whatever it was that caused the stock to drop down like this, would not have affected you. And you would not have had to look or study the earnings or whatever the announcement was based off. All you would have had to know is that we're in the red sell zone. Therefore, I should not be long this stock. Same thing will happen with FDX here, all right? FedEx, all right? Obviously, some news came out. This was today, this morning, where it gapped down tremendously. Once again, I have no idea what it is. But if we apply the fluid buy sell line, there's absolutely no reason to concern yourself with what the news was, because we knew, once again, as far back as nearly a month ago, to be out of the stock entirely. We had 3 consecutive closes in the red zone when stock was trading roughly about 222, 223. Okay, the stock is now trading at 162. So why did I have to follow any news or concern myself when the market told me just about everything I need to know? Now you can apply this to stocks. You can also apply this to cryptos if you want. Here's Bitcoin. As you can see, even though we had this really nice bounce here and people were saying, hey, it's time to get long again, we've only had 1 close above and quickly right back down again. Or if you're a currency pair trader, the euro dollar has been flirting with bouncing above. It just has not been able to do it. So therefore, any bounce in the euro should be looked upon as a selling opportunity until you get 3 to 5 closes in the blue buy zone. Lastly, we can look at gold right here. Same exact thing, all right? It's been in the sell zone since April. And once again, any bounces should be looked upon as selling opportunities. Now, we teach our students to look at each stock individually or each market individually. Sure, you can look at what's happening in the overall market, but a lot of times a stock will just do whatever it wants to do, such as the case with AKRO. As we look at this right here, we see that the stock has been going sideways and then higher. Now, we had 2 buy signals right here with one of our strategies. And had we simply applied the fluid buy sell line, we see why. Because they were both generated when price was in the blue buy zone. Now, obviously, once again, some fundamental news came out, and this was actually on the same day as the market fell out of bed on the 13th. But whereas this wasn't going along with the market, this was individually just generating signals based off what AKRO was doing. So you can apply the fluid buy sell line to any market, any time frame, and it will tell you individually what that market is doing. And then you can apply signals, such as what we did here with one of our strategies, okay? Just a week before, it was telling you to go long. Now, if we look at that 10-minute chart of the spiders, all right, someone would say, well, how could I have done well with that day? Well, one of our strategies, once again, you just generate this arrows, could have told you exactly where to go short. We look at Adobe, once again, with that news that caused it to gap down. Well, all you had to do was apply one of our strategies, and you could have seen that you could have gotten short a full 2 days before that big drop down. That even could have worked, obviously, with FDX. Same exact thing. Once you're in the sell zone, you only want to identify sell signals, and at the very top of that bounce, you could have taken advantage. So you see, all of these signals, all of these setups were generated without the use of any fundamental news, without the use of looking at any earnings or indicators that are based off of economic announcements. It's based off what the market is telling you. I stopped looking at news 45 years ago, and I believe it's one of the cornerstones that has added to my longevity, because fundamental news is very difficult to figure out many times, and sometimes you'll see a great announcement and the stock will go straight down, right? Or you'll see a terrible announcement and it'll go straight up. It's a lot easier to learn how to listen to the markets and to learn how to base your decisions off the source of what you're trading, the chart in front of you, than to try and calculate what's going on off of some other idea that basically is just a little bit too subjective, okay? So as we go back to the theme, once again, remember, Trading and investing based on fundamental news is not a requirement. So therefore, if you want to use it, you're free to use whatever you want, but it's not required in any of our strategies or teachings here. Why? Because the market you're trading tells you just about everything you need to know. Now, everything I just showed you was displayed coming from the PTS Primo charting platform. This is the charting platform I developed the proprietary strategies that actually teaches you how to trade. It has roughly over 4 decades of tips, techniques, and strategies that I've accumulated in my trading career. Now, if you'd like more information about the buy-sell line, about our platform, or any of our strategies, please contact Pro Trader Strategies. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants there to answer any question you may have about discounts, about pricing, and about tech support. Now, you can also click on the link below to get more information online. As we close, I just want to say thank you so much for attending this brief educational video. I hope you learned something, but most especially, I look forward to all of you becoming students of mine in specialist trading. Thank you for watching Primo Trades. I'll see you next week. Bye-bye.